Hello, William Bissett. Thanks for joining me.
Thanks, John. It's good to be here with you.
Yeah, you were one of the first podcasts I ever did in the early days, and really seeing you do it was what kind of inspired me to try my hand at it. So I really appreciate you joining me today.
You must have seen me do it and said, "Gosh, there's got to be a better way to do that."
If this guy can do it, right, I can.
Exactly
No,
right.
but I think the thing that I probably appreciate most about what you've done is just the consistency of doing it. You're very disciplined, and you just make a point of doing it, and you've got a format and you follow it. And I think that's really the key, is to just that consistency, so that people know they're going to keep getting good content from you.
It's funny, John. I was talking to somebody about podcasts earlier today, and as a multiple time entrepreneur, as somebody that shows up at the gym every day, we were talking back and forth about what it takes to run a podcast. And he was like, "Look, the number one thing with running a podcast is the same thing as the number one thing with anything to be successful in life: consistency. You just have to show up and do it over and over and over again. You'll learn." People know what they're going to get out of you, and is going to continue to build and grow upon itself, just like being at the gym, just like showing up at work every day, just like doing everything else. So that consistency is something that you've got to strive for.
I agree. So I do want to come back to your podcast, because it's gotten some great traction and recognition in the Southeast as well. But first, can you share with the listeners what you do for your day job? Or do you
Yeah.
call one of your jobs a day job?
Yeah, no, I mean, it's a good question. So I've been in private wealth management or wealth management since 2005. I started off with a firm up in the Baltimore area. I was with them from 2005 to 2015 for multiple reasons. We can get into if you want to. I left them in 2015 and I joined a Charlotte area firm up in the Davidson market. Was with them from 2015 to 2018. And then in 2019, I finally started my own firm. So there's three of us. We've got a kind of a part-time outsourced chief investment officer as well. So three and a half. We're looking in the process of probably hiring our fourth person at the moment. So that's job number one. And then job number two, that takes up some time and some enjoyment as well, as we've recently started an entity called Charlotte Growth Partners. It's the idea behind of it is the Charlotte market is a market that I expect will continue to grow for the course of the next couple of decades. Much like a DC or Philadelphia or other large cities
Or
along the
Atlanta
East
10
Coast.
years ago, probably,
Atlanta
right?
10
Yeah.
years ago. And I look at Boston to DC over the last 40 years being similar to what Atlanta to Raleigh can be over the course of the next 40 years. Charlotte sits smack dab in the middle of it. So Charlotte Growth Partners is an investment entity that we expect to have multiple different arms underneath it. Right now, we're in the process of raising money for a real estate fund that will invest in Charlotte area real estate. There are multiple other legs that we could develop alongside of that as well over time. So those the primary job is wealth management, is what I know, is what I think I'm good at. But as a result of that, and again, as a business owner, as an entrepreneur, you do something and you see something that's missing from what you want to do and to deliver, and you can't find the right thing. It's what do? You go create it because it's what you were looking for, and it didn't exist in the way you wanted it to exist before now. So anyways, that's what Charlotte Growth Partners is it's an extension of the wealth management business.
That's interesting. And so I take it it's commercial real estate, or is it doing residential, or
It'll
both?
do a little bit of both. So the concept really, I mean, again, wealth management, risk management, right? So one of the things that we want to develop is a risk management strategy around it. In an ideal world, John, we'd have four different legs to it, and they'd be kind of equidistant or equally allocated. I'd like to see 25% of the capital that we raise and deploy go into multifamily. I'd like to see 25% of the capital that we raise and deploy go into industrial real estate in the Charlotte market, 25% go into mini storage, and 25% go into developmental projects. Um, and that if we can diversify what we invest in as limited partners and projects across different developers, we've got multiple layers of diversification built through the system. And we've done it in a way that everyday folks can't get as diversified as we'd be able to do it with the fund structure, right? So consider, the way I keep telling myself in the head is it's a Charlotte area non-publicly traded REIT at the moment.
I like it. And I think that for Charlotte real estate, it is hot. There's no doubt across every sector. And even in commercial real estate, I mean, we saw the building that we work and Slalom are in sell for a record price during the pandemic.
Yeah.
Rental rates aren't coming down. There may not be as many leases being signed right now, but the reality, and in the residential market, you just can't find homes. There's just way more people moving in than there are homes being built. And I think as long as there's that demand supply imbalance and a net import of people, the real estate market across the board should do well, I would think.
Yeah, with if I'm in a legacy city like New York or Chicago, maybe San Francisco, I have a little bit of a harder time with it. But in a city where people seem to be moving to rather than from, I think even coming out of this, Charlotte still has wind in its sails.
I agree. I'm definitely bullish on Charlotte. As a transplant myself, I moved here in 2005 after traveling here for a year, and
Yeah.
I've seen some ups and downs in the city, but it's overall the trend is in the up direction.
Yeah, no, I agree with you 100%. Let's hope so, right? It's a place we call home. We want to see it thrive and do well.
Hopefully. So you hinted at this a little bit, but what drove you as you were working for great employers as a private wealth manager, and now you're with your partners out on your own? What's different about what you can do by yourself compared to being part of maybe a bigger platform, I'm assuming.
Yeah, no. So, it's a great question. I When you work for somebody else in any industry, they make the rules, right? So, and I had a great firm. I worked with a firm in Columbia, Maryland. It's a very large firm. Great partners. One of the founders is still a good friend of mine. He's a mentor of mine still, as a matter of fact. So, but they set the minimum, right? The minimum was $1 million in assets under management, and you needed to have that to come on board as a client. It's a great minimum. It creates a profitability standard. It does some different things that make sense, right? Except it also excludes some people that you might want to work with otherwise. It excludes entrepreneurs that don't have wealth yet, but have complexity. And if they turn someplace without wealth that's not you, they're going to end up probably in a place that they don't want to be. They're going to have products that they don't need, so to speak, right? Um, and so, and also when you end up with a $1 million minimum and that's your only minimum, you don't necessarily weed out by personality. Your goal is to bring clients on board because the firm wants to grow, right? Well, now I have my own firm. I have two minimums. Um, we have to establish a profitable relationship, right? So that can be in any way, shape, or form we want. We don't sell products, but we can charge a planning fee. We can charge a retainer fee. Um, we can limit the number of hours. There's a lot of things that we can do to create a proper relationship, and it doesn't have to just be tied to assets under management. So
I like that, the profitability bar. So it's, hey, we can get creative and figure out there's ways to make this relationship profitable,
yeah,
right?
you can buy me lunch, right? So no, I'm just kidding. Or a drink. I'll take either one, as a matter of fact. But so profitability is a key because it goes back, right? You're in business to continue to be in business. You're in business to help your employees grow. You're in business to be there the next day for your clients and your customers and everything else. So if you create unprofitable relationships, then it's not going to work, right? You're going to end up going out of business, and then clients and employer or employees are all unsatisfied. So first things first is it has to be a profitable relationship. Second thing, I love this, and I can say it on air with you. I think no assholes, right? So we've
That's
got
one
our
of
person.
Tarek and my's first rule for Defiance Ventures. We said it as no assholes, but then we refined it too. It has to be somebody I would enjoy having a drink with.
Yeah, fair enough. That's a much more polite way to say it. But John, you've been on this planet for long enough to know it's just it's not worth being around people that are going to be jerks,
Yeah.
right? I don't have the time for it. My employees, as we continue to grow as a firm, they're going to get frustrated if they deal with it, and they're like, oh, I need to talk to this client because of X, Y, or Z. And then they're going to get down, or they're going to get negative, which means the next phone call they take, they're not going to be as pleasant. They're not going to be as happy. They're not going to fulfill what the client needs as well as they would have done otherwise. And so that's just it's not going to propel the client, the firm forward the way I think it would be. So the biggest difference for me is really being able to set the path of the firm in the way and shape I think it should be for it to grow on my terms. And I think my terms are the right terms for me and the folks that are working with us.
That's awesome. And I think any successful entrepreneur that I've met, their answer isn't, I did it by myself so I could make more money. It's always, I did it so I can do it the right way.
Yeah. So
And
and
the money will follow if you do it the right way,
yeah.
right?
And any successful entrepreneur will no, I shouldn't say any, but most successful entrepreneurs would tell you that their way is the right way, right?
Yeah, yeah, absolutely. Well, and the good news is they'll figure it out quickly because the
Yeah.
market has a way of telling us if it's the right way to do it.
So, and
So
you've got
what?
it,
I'm sorry.
and you've got adaptability, right? So you run your own firm, and so as the entrepreneur, if the market's telling you to do it a different way, then go hire a bunch of assholes as clients.
But it's funny, the no asshole thing. The other way that we like to put it is, you can energize a room in one of two ways: walking into it or walking out of it. We want to be around people who energize it when they walk in, not when they
Yeah.
leave. If when someone leaves a room, if all of a sudden everybody's happier, you're an asshole. So.
Yeah. No, I mean, it's a great point. I never really thought about it that way, but you are correct. There are rooms that get very excited when somebody leaves.
Yeah, exactly. So in this private wealth management industry, what sort of trends over the past 5 years do you see as shaping the future? Is it a move towards millennial wealth? Is it this pushing people with bigger and bigger amounts of assets under management being the minimum, and otherwise you deal with robo dialers? What are the trends that you see as shaping things?
Fintech,
Mhm.
right? I think what's coming through fintech is um it's it's even hard to see from where I sit today, right? What this going to do and disrupt. And I mean, obviously today was April 14th,
Coinbase.
Coinbase went public.
Where'd they
Um,
close? Up 34%. That last I looked, they were 33.5%
yeah, I
of.
think it's right around 328 or something like that.
Wow,
So,
market cap of 100 billion. Wow.
yeah. So almost the same size as Charles Schwab, right? So I mean, Charles Schwab is a $124 billion market cap company. So a company that's been around since 1972 has huge international and national exposure. Coinbase started in 2014, 2012, and is the same size. So it's a crazy concept. And I still don't understand what Bitcoin is or what cryptocurrency is or the blockchain or how all of that stuff is, but I understand it enough to know that blockchain and what it's doing has a complete and total ability to disrupt this industry in ways that I can't foresee yet. So I think that's coming. And I think it's coming at a faster and faster pace. I've come to realize that um, robo advisors, um, they're an assistant arm for advisors in the future, right? I think they automate processes because the term gets bounced around quite frequently, but at the end of the day, they do one thing really well, and they're trying to figure out how to do other things, and it's hard to do. They automate the investment management process, right? And automating the investment management process means that you can drive down cost. And if you can drive down cost, you're either more profitable or you can lower costs for the clients. And if you lower costs for the clients, then everybody's happy. What they don't do is they don't do tax projections, estate planning work, life insurance conversations. They don't hold hands. They don't do all of the other things that go into the wealth management aspect of the practice. But I do think that robo advising is going to um, aid the advisor of the future so that they can probably service more clients, because at the end of the day, there's not enough good quality advisors out there at the moment to honestly serve all the consumers that need advice. What we end up with is we end up with a lot of bad quality people that are selling products rather than advice. And so they sell a product to fit a need rather than advice to help the consumer. And so I think robos will kind of help naturally expand the number of people that are assisted. And then, completely irrelevant of that, I think we're going to see, not think, I know we're going to see more minorities, more females in this industry. And it'll be extraordinarily helpful because uh, we just hired an investment analyst for the firm. It's a female from India. The perspective that she brings to the table is vastly different than anything that I've ever considered. And I think the diversification around this industry will make it 1,000 times better.
I
So,
couldn't agree more. And I would say the same thing for tech broadly. I've interviewed recently 3 African American founders and 4 female founders on the podcast. And the perspectives that they have, they need a seat at the table, and not just for themselves. White males who have had the seat at the table need them at the table too, because a more diverse system is a more robust and less fragile system for sure.
yeah, no. So, anytime somebody looks at a, it's one of the benefits. I mean, I've been a member of Charlotte Angel Fund for years, since back in 2015, and one of the things that I first appreciated the most out of that room, and it's not diverse enough. It wasn't diverse enough then. It's not diverse enough now. And that's not anybody's fault, other than just the ecosystem isn't there yet. But you go into a room like that and you sit around 40 or 50 people asking different questions. And now all of a sudden you've got the doctor across the room asking something from a medical perspective and the lawyer asking something from a legal perspective. But if you get the female in there, if you get the, African American, you get these different people that are looking at it through different lenses. It helps give you more data, and you have to process the data correctly, right? But it opens up eyes that wouldn't ever open. I guess it opens up your vision to places that you wouldn't have seen it otherwise, because you've got those natural blind spots.
Absolutely. So I couldn't agree more. And so I'm curious, as you made the decision to go out on your own and to launch Charlotte Growth Partners, was there a moment that inspired you to do it? I know you saw that, hey, I think I have a way that's going to work better for me to do this. But a lot of people, when they go out on their own, it takes something that kind of nudges them and they say, you know what, I know I have to go do this. Did you have that kind of moment or?
Um, I'd kind of I got into a point with the firm up in Davidson that um I was I was growing at a pace personally and with my client base that it didn't make sense anymore to be with somebody else.
Mhm.
And if I was with somebody else, I needed to have more say in the future of what that firm was going to look like, and I didn't have the say I needed about that future. So it I'd been with Pinnacle from 2005 to 2015, and I'd kind of just grown frustrated with the staleness of it, and I liked the newness of the firm in Davidson. And what I figured out over time is it wasn't the staleness that was bothering me. It was just the fact that I didn't have a seat at the table as far as what the future looked like. I'd seen Charlotte enough to know a couple different things, John. I'd seen Charlotte enough to know that there's a fair amount of business owners and entrepreneurs around town, and having a minimum for those folks is more difficult because oftentimes their assets are tied up in the business. And I wanted a way to work with business owners because I thought they were sharp people and I could learn a lot from them. Um, and so that was one thing I knew about Charlotte is business owners were going to make up a bigger portion of my client base. The other thing that I kept seeing around Charlotte with Charlotte Growth Partners and how it could develop is I lived in Baltimore, which is right outside of DC. A fair number of my clients were in DC. And the same thing in Baltimore. My wife's from Philadelphia. And so with Charlotte Growth Partners and the real estate component, and I have a co-founder with that. His name's Chad Jenkins. And so I've talked to Chad about this, and Chad has his own opinions that are stronger and better than mine. But my view of it was um, all of these big metropolitan cities end up with cities outside the city, right? So if you go to like,
I grew up in Northern Virginia, where you could argue that
okay,
Reston is a city outside of the DC city.
yeah, no,
Yeah.
so we'll use that as an example really quick. You've got
Tyson's
Tyson's
Corner.
Corner,
Yeah.
you've got Bethesda, you've got kind of sort of Arlington and that Pentagon City area. You've got some stuff that they're trying to do out now by University of Maryland. So you've got these multiple cities that have popped up, right? And if you pull up a map and you look at Atlanta, Atlanta has like 3 cities outside of the city. And you start going through large metropolitan areas across the country and you realize that's what happens. And you come back in 2016, 2017, when we started Charlotte Growth Partners as a concept and as an LLC before we realized what we were going to do with it. It didn't really have it, right? I mean, it's got Huntersville that's trying to grow up, but it's not resting in any way, shape, or form at the moment, right? And you've got Fort Mill and Rock Hill, and it's the same thing. It's growing up, but it's not resting. Um, and then I think if you go out and you look at, Gastonia sits out there, our own university city sits out there, and Matthews sits out there. So when you go around our beltway, it's like, well, gosh knows, this is still a small town.
Hmm.
It's got the infrastructure to support a lot more, and that requires growth, and that growth requires real estate. It requires lending. It requires venture capital. It requires operating businesses to grow and expand at a decent pace to continue to supply the community with the things that they need. And so that that was kind of the aha moment for Charlotte Growth Partners. Um, Portus Wealth Advisors was more a born out of frustration of not being able to guide the direction of a firm on a go forward basis.
Awesome. So you mentioned your involvement in the Charlotte Angel Fund. What do you think is changing the most in angel investing across the country as you've been involved?
I don't know. I see crowdfunding as something that's going to continue to make an impact. And I don't know how yet it's going to make an impact, but I do think younger folks. I'll go back and I've kind of always, for the last couple of years, I've thought, there's been that eat local movement for the last 10 or 15 years, right? You want farm to table stuff from right around the corner. There's been the Amex sponsor thing for the last probably 5 to 8 years, which is the shop local. And I think that more and more people are, if presented the opportunity, they'd like an opportunity to invest local, right? They want to impact their local community. It's hard to do that investing in the SPY, right? The S&P 500 index fund. I mean, it's not hard. You're not doing it at all. So, I think angel investing and to a certain extent crowdfunding over the course of the next 10, 15, 20 years could allow people to have a, a more direct impact and invest and participate in the growth of their own communities, cities, towns, or whatever it might end up being. So that's one thing. I mean, clearly there's a lot more interest in it, right? The proliferation of wealth that's been generated out of San Francisco has made more people want to be, super angel investors. And now that everything's a SPAC, I guess everybody wants to be a SPAC owner too. Maybe you and I should start a SPAC, John. But
I'm game. Some of these numbers are eye popping to me.
yeah, aren't they? So we'll blow it, right? We'll raise SPAC money. We'll go out and buy a CrossFit gym or something like that.
Farm to table restaurant.
So no, I mean, there's a lot more money that participates in the angel space today. And I think to a certain extent, that's a really good thing. And there's probably some bad things that will come out of it as well. Ultimately, the bubble in that space probably pops and you end up with more regulations. And because that's what always happens, right? We overregulate after the fact and underregulate ahead of time.
Yeah,
So
I
I
agree.
don't know. Those would be the two things I look at.
So you originally reached out to me to be on your podcast. I'd kind of stirred up a local hornet's nest with you and a couple of other early stage investors when I wrote a blog piece that where really what I thought I was doing was challenging my fellow entrepreneurs out there by saying that I don't think a lack of early stage funding in Charlotte is holding anybody back in our
Yeah.
ecosystem. And my contention was that funding follows entrepreneurs and will seek out the highest return wherever it can find it. And I think we had a very civilized discussion, and I think I understood your points. But first off, has your mind changed much on our discussion?
Oh yeah. No, it's funny. I've forgotten about that conversation, John. That's such a throwback. So what a great question. No, I mean, it's the chicken and the egg problem. And you need capital. And it is it is important for a developed ecosystem to have local capital, right? Because you raise a flag of capital and things happen, right? It just naturally happens when you say, I've got $100 billion to invest. It's like, oh, wow, I need $100 billion, right? Everybody comes out of the woodwork and all of a sudden you've got a lot more stuff around here. But to develop an ecosystem, you need strong entrepreneurs, right? You need people that can plow through doors and create the ecosystem. And to your point, it's really valid. If you're a strong entrepreneur and you have a good concept, it doesn't matter if you're here or New Bern, North Carolina. You'll find your funding because money's going to seek out good concepts.
Yeah,
So yes,
I agree. I
you've
did.
won over the long term.
Brandon Shelton wasn't happy with me, but
Yeah,
I think he misunderstood
yeah,
what I was saying. I consider him a good friend, but
yeah.
but I think it's a conversation worth having. I had a few entrepreneurs reach out to me, and they said like that was a good wake up call. Like we were using this as an excuse, and the reality is you can't. Like we had to be honest. People aren't investing in us because we're not good enough. Let's get good enough, and let's go do it. You know.
Yeah. No, I mean, um, it's a super valid point. And um, it took me 3 years to get to to agree with you. It probably
So
took me 2 years for me to agree with you, but it took another year for us to have another podcast interview. How's
exactly.
that?
Exactly. Well, also when we last spoke, you talked a lot about Pragerville and the aura effect that a massive avid exit will have on our ecosystem. And you and I have agreed on this from day one, and we talked about it on your podcast. There was a recent article about their plans for a massive IPO. I think it's the worst kept secret in Charlotte that they're making some moves, and the valuations that they've gotten are really eye popping and well deserved for what they've done. Talk to me now about what you think this will mean for our ecosystem, given where we are today, not 3 years ago when we first talked about it.
3 years ago would have helped a lot more than it's going to help today, right? It's pretty clear the ecosystems is developing, it's mature. You've got some really good quality entrepreneurs here. You look at, I mean, obviously Passport's probably not too far behind it. You look at some smaller opportunities around town as well. There's some really good entrepreneurs that are getting funding and getting, I mean, to your point, it's almost now like there's some capital in Charlotte and it's not getting a seat at the table, right? These entrepreneurs are good enough that they're skipping the local capital and
Yeah.
heading out of town. It's like, well, wait a second, that's not supposed to happen, right? We've got the capital for you now. Where's this at? So, but anytime you talk about those eye-popping numbers, as long as enough of the people have as long as there's enough people that didn't get diluted down or didn't jump ship without everything they needed in place, as long as enough of that money is local in the ecosystem, of course it's going to help, right? I mean,
Yeah.
it's going to add another tailwind to Charlotte. It's going to help this ecosystem grow at a faster pace. And I think one of the other things that we touched base on, I can't remember if we touched base on it here on a private call, the ecosystem, you almost felt like you were watching this train come down the track, right? And it had the light on, and you couldn't tell if it was 10 feet away or 1,000 yards away. And I mean, it's a heck of a lot closer than 1,000 yards away now. I mean, it's running down the track and people are just going to jump on board. And I think, the exit of Avid Exchange just, it throws it to another gear.
Absolutely. And you can already see the talent proliferating. There are CFOs who have been involved in exits now who are now working on their second one. I'm thinking of guys like Chris Rossbrook, who were there
Yep.
for the Map Anything exit, now over at Ecos doing great things. I'm thinking of Shannon, I can't remember his last name, but he was involved in the precision lending exit.
Mm-hmm.
Now he's involved at Stratified. And I think that's a big part of what we're talking about here is you start to get people who have been there and done that on a couple things, and they can then bring that knowledge to the next one, and it just starts to really multiply. And by the way, people that have capital and have made it that way are much more comfortable with early stage investing for sure.
Oh yeah, no, absolutely. So no, when you have multiple time founders that have had exits, and are going to work for another startup, that's your ecosystem is well on its way at that point in time, right? They didn't sell and move to Charleston. No offense to Charleston, I love Charleston; it's a beautiful city, but they stuck around here instead.
Well, and even on the product side, right? Because typically we're not known for great product managers, although that's changing pretty dramatically. But very good chief product officer and Tom DiVittorio, involved in Encino in the early days, a great success story
Yep.
out of Wilmington, and comes to Charlotte for Map Anything, and he's with Salesforce now. But I'm sure a guy like that at some point finds the next thing that he wants to get involved with, and now you've got a world-class chief product officer who's been through 2 exits.
Yeah.
It's great to see that happening. And you mentioned Passport. I think that's the next big success story. I think Pazer is another one where you've got some really good operators that found a really good niche, and they're growing it really fast and doing all the right things.
Yeah. No, I agree 100%. So I'm excited to see the type of firepower that Avid brings to the ecosystem. But there's enough there that if it never exited, that the community would be in great shape.
Absolutely. Absolutely. So do you think COVID has impacted early stage investing at all? Because some asset classes, more money lined up. Some asset classes, it got a little bit more difficult. Do you think that early stage investing was impacted by that at all in either way?
I do. You saw it, in several instances. I mean, gosh knows, Charlotte Angel Fund had, I think, all but approved 2 investments, one in January and one in February last year, and hadn't deployed the capital yet for whatever there's an outstanding condition of this, that, or the other thing, and then ended up, not deploying the capital as a result, right? And so I think some companies, and then you talk to others, that they were in the process of raising money and they had to stop, focus on the business, or they just knew that it wasn't going to be there for a little while, as groups try to figure out what it meant. And so I think what happened is some super early stage companies that probably needed seed stage funding or something else probably didn't make it as a result. Um, and but I mean, to your point from earlier, the strong entrepreneur is going to make it through just about anything. The strong entrepreneur with a strong concept, right? They've made it through that 2-month hiatus of no meetings, or trying to figure out how to present to a what used to be a 50-person in-person meeting to a 5-person Zoom call because nobody could figure out how to click on the link or do whatever. I think it. Um, and I'm sure it's had other impacts as well. I mean, to your point, it's certain companies probably got fast tracked to go through the process quicker through COVID because the expectation was those industries would succeed in a post-COVID world. So, there's always some impact. It's funny. I did think that this next recession was going to be super beneficial for entrepreneurs in Charlotte. And we didn't get what I was expecting, right? We didn't get that, and we hadn't gotten it yet, and maybe we still will. I was still thinking that we'd get a a couple mass banking layoffs in Charlotte where we're laying off some super quality mid managers, other
Ironically, that's the
people.
best thing that could happen to this ecosystem would be big rounds of layoffs in the banks.
Exactly, it'd be fantastic, right? Because all those people, there's now enough of an entrepreneurial support system that if those folks got laid off, they'd come in and they'd instantaneously started creating products for the banks and for the financial community. And I really thought we'd get that in the next recession. And just because all the money the government threw at the problem, it never ended up happening. Um, yeah, I think it impacted the to a certain extent the early stage deployment of capital. I think it probably didn't help Charlotte as much as a more traditional recession could have.
Very interesting. I love that line of thinking. What about your business? How did things change for your business much with COVID?
You
But
know,
when I say your business, I mean Portus.
yeah. So it's a good question. We had a um we had a really good year. Um and so one of the things I kind of learned early on, and it goes back to showing up every day. The best thing, and I did it in 2008, so I'll never forget this. So 2008, October 2008, we had a conference in in Boston, Massachusetts, and I spoke at the conference. It was a national conference for financial planners, and I spoke at the conference on financial planning software, and a specific type of financial planning software that we were using, and it was neat. And my wife was all excited, so she came up to the conference, and she saw me do the speech, and then after that, we drove up to Bar Harbor and spent a couple days, October 5th through 9th, which, if you don't remember, was the week the market corrected 24% from peak to trough.
Was that the Bear Stearns week, or that was
Yeah,
Lehman Brothers week?
yeah, it was coming off of that. Exactly right. So, the Federal Reserve had stepped in on September 17th to backstop the money market funds. I think Congress passed something late September, and the market got disappointed, and what they passed wasn't sufficient or didn't meet the market's expectations, and so the market just rolled over. And what I learned in that recession was clients aren't mad at you, so to speak, as long as you haven't done something crazily stupid. They're mad at the situation and they don't understand it. And so the best thing to do is just be there, right? Just make phone calls, send emails, be present, and just bust it really hard to let clients know what's going on, that you understand what's happening, how you're reacting to it, what your expectations are, how you feel about it, and everything else. And so we were really crystal clear about what was going on in February and March of last year. And as a result of that, what I probably consider at times over communication during that time periods, we got flooded with new clients in April. Um, so more so than we could really handle, actually. And so we had a really good 2020 because we showed up and did the difficult things, made the difficult phone calls, admitted we didn't know or understand stuff, and clients appreciated it. So
When were the markets at their bottom? Because for a while it looked like this was going to be a 2008, just completely bottom falls out, and maybe lending seizes up, and you start to see bankruptcies. So the market, I feel like, reacted pretty quickly and priced it in, and then anybody who got in at that point had to be doing very well. Was this what did you find, that was this around the April timeframe, and you're coming in with new assets, buying in at a low?
yeah, we look brilliant, right? So no, the market's bottom on March 23rd. It
Okay.
was weird. You could start to see it, right? It's like anything else in life. You think it happens instantaneously, right? All of a sudden on March 23rd, the market was up like 4% or something like that day. I don't mark my words on it, but you can. There's these S&P 500 heat maps. And what it does is it shows all the companies in the S&P 500, and it's kind of bunched by industry, and then it shows whether or not they're up or down, and they're color coded too, right? So they're red for down, green for up. And from this, I think it was February 21st, all the way through middle of March, every time there was a down day, just about every stock in the S&P 500 was red. Um, and then right around March 18th the year, March 18th, 2020, you started to see some green names on big down days, right? Amazon was up, Walmart was up,
Netflix, adding subscribers.
Netflix,
Yeah.
right? So all of those stay at home themes started to emerge. And then obviously soon after that, the Federal Reserve came in and threw a boatload of money at credit and said, we're going to backstop credit. And then Congress started coming out with what was expected for their first iteration of the COVID relief package, et cetera, et cetera. But if you look, and look, black swan events happen all the time. They catch everybody by surprise. And I can't say that you can see every single thing. And we didn't see the bottom. I'm not saying that we saw the bottom, but you could see indications that something was a change in the marketplace, and it was trying to find some semblance of a bottom. And obviously, a couple of days later, it did, and it just took off, and the rest is history, right? And I'm not saying that we went to cash on January or on February 21st, and we went all equities on March 23rd. I mean, that's would be a complete and utter lie. We're by and large long-term investors, so. but so we had a really good year last year, not because of our investment strategy or investment decisions, but because we over communicated to existing clients about, hey, we're scared too, and this is what we're doing as a result.
That's instructive for people in any business, setting expectations, managing expectations, being there, showing up and doing the work, even through the uncertainty. I think that that's a recipe for success.
Yeah.
And a lot, I think like a lot of things we saw in the pandemic, these weren't things that only apply in a pandemic. It just accelerates some things and
Yeah.
makes some things that much more obvious.
Well, I mean, your point's valid, John. I mean, yeah, I've got a couple of investments that I've made out, illiquid investments. And I know perfectly well they're doing great. They're good investments. They're run by quality people. They're in the right places. Um, I don't hear from them, right? And so when I don't hear from them, I know they're fine, but there's that bit of self-doubt that starts to creep in. And so if you're not communicating, then you let people form their own opinions. And when people start to form their own opinions, you slide downhill really fast because um, because people naturally are going to have that self doubt about what's happening, and then it's self fulfilling, right? You come out and say, "Hey, this happened," and it's like, "Oop, I knew it. I'm out." And so just that ability to share your story, what you're doing, how you're doing it. I think in a whole bunch of instances as an entrepreneur, right? I mean, you look at, entrepreneurs around town, they're raising money. One of the first things that they ask me is, what should I do better to raise capital? Send a monthly newsletter,
Yep.
right? To all your family's friends, um, potential investors, potential clients, everything else. Send a monthly newsletter. It doesn't. You don't have to write a 500-page dissertation every month, right? One page newsletter.
I'll take it
This
even
is
a
what
step.
happened.
I couldn't agree
Yeah,
with you more. I'll take it one step further though. I mean, I'm with you that even if you only have good news, you should tell me good news. But
yeah,
I preach this to people. Good news is no news. Bad news is good news because we
yeah,
can fix it, and no news is bad news because I have no idea what's happening. So,
yeah,
and I tell a lot of entrepreneurs, I'm like, I don't want to hear your rah bullshit. I know that you're optimistic. I know that you think this is great, but your advisors and your investors also need to know when something's tough and when you've done something bad and you're trying to fix it. Like you can't hide from that. And I think just in general, over communicate, but maybe let's make it a little bit more realistic about where we are. I get why they do it because they're worried that that next round of capital is going to be used against them, and that maybe is something investors should think about when they think about the long game and not beat people up for communicating bad
yeah.
things.
No, you're right. I mean, you're absolutely right. And I don't know if Charlotte's any different than any place else, but I've always felt like Charlotte under communicates failure.
Mhm.
Um, and I mean, shoot, you want to dive into failure? I mean, let's go, right? I mean, I got another hour and 10 minutes before I got to be somewhere. I got every second of that time to talk about failures.
I helped Terry Cox from Big bring a conference to town called Failure Conf. And,
Okay. Yeah.
it was all where they got successful entrepreneurs to come and talk about their failures because let's be honest, that's a big part of success is failure that a lot of people are afraid to really to communicate.
Yeah. To voice out loud, right?
Yep,
So how am I going to
absolutely.
be perceived
Yep.
as normal?
Yeah, exactly. Well, and especially in a town that's built on banking. I mean, banking is much more about managing risks than
Yeah.
it is about taking risks.
Yeah. No, that's a
And
good point.
yeah, and look, you don't want to run on a bank, so you tend to communicate a little bit less because it could have unintended consequences, and it probably makes a lot of sense in a fractional reserve banking economy to take that caution. But I think that when you're trying to build something new and things are moving quickly and things are breaking, and I think that being able to communicate openly when there are failures is probably a lot more useful than it is in other contexts.
Yeah. No, I agree. 100%. I'm with you.
So with the early stage investing activities that you're doing with Charlotte Angel Fund, does that complement your wealth management, or is it just, hey, great, if I'm involved in something as an investor, I may have some new clients on the private wealth management side in addition to me making return on mine? Do you see those two as complementary or?
They complement each other. Um, so take a step back for a second. I had a software as a service startup that I tried to get off the ground in 2012, right? It's called Principled Heart. It was a estate administration planning tool. In other words, when we die, all of our institutional knowledge dies with us. And 50 years ago, that didn't matter because we were all in the same small town, right? We went to the same church. We had Wednesday night dinner, Sunday afternoon dinner. Went to the same post office, bank, all of that stuff, right? Institutional knowledge didn't matter then because it was easy to take over. These days, we don't live in the same small town. We don't go to the same church. We don't do any of that stuff, right? So when somebody dies, that knowledge goes with them. So Principled Heart was built on on the concept that we needed a way to store and deliver that information to those folks around us so they could step in and unwind their lives. I wrote a bunch of peer-reviewed articles. I wrote 13 peer-reviewed articles, published them in different journals in different formats. And as a result, I got picked up in the New York Times
Oh, wow.
as a startup in that space. Digital assets at that point in time was an interesting conversation on a lot of different levels. Turns out clients read the New York Times. And so I had a couple of clients reach out to me and say, hey, look, that's a really awesome idea. We like it. Can we invest in it? Smart enough to know, I said no. Right. I didn't want to mix those two businesses. But fast forward a couple of years later, a whole bunch of reasons, mainly which are my fault, some of which it's just a hard industry in general, shut the business down. I circled back around to those clients and said, how interested are you really in, angel investing? And much to my surprise, most of them told me that they were already doing it. I just didn't know about it. And I felt that was pretty surprising because I thought we knew everything about each one of our clients. And so when I learned that, I was like, well, gosh, if they know about it, they're already doing it, then I should know about it too. And so the only way for me to know about something is to participate in it, right? So I went to the Charlotte Angel Fund meeting and started to learn about angel investing. And as I did, I realized that, hey, there's, developers that raise capital for, real estate projects, and there's venture capital funds, and there's private equity funds, and there's all of these other things. And so what I learned was clients were receptive to those concepts. We just never brought it to them. And as a matter of fact, most of them have what we call play money that they like to do something a little bit different with anyways. And so what it did is it allowed me to be a much better advisor to my existing clients because I engaged in conversations with them around those different assets. And as a result of that, now it was documented in their financial plan, right? How is this asset taken care of? It allowed us to think through strategically, how do they want to own assets? It allowed us to think through how our assets going to be divvied up in the event somebody passes away amongst kids and this and that. How's it handled in their estate plan? Should we use an LLC or a trust? Or so now all of a sudden I'm much better for those existing clients because I understood it and saw through the issues and challenges that would develop otherwise. And as you do that, you all of a sudden get introductions to their friends because of the depth of the conversations that you're having, right?
Yep.
Have we picked up clients as a result of being a member of the Charlotte Angel Fund? Yes. But we picked up more clients as a result of better serving our existing clients at that point in time.
That's a great point. I mean, I like to say to people, like, if you're building your network and you're building your skills, it doesn't matter what somebody's paying you. A $10,000 a year raise is not worth what building skills and building network is. And so you've clearly done both. You can talk about non-correlated assets that are actually maybe non-correlated, although everything correlation, the only thing that goes up in a recession I hear is correlation. But
that's very true. Very true, except for Bitcoin.
Except for Bitcoin, uncorrelated to anything.
That's right. Yeah. So,
So,
yeah, but no, good point.
so I'd like to switch gears to your podcast. How did you come up with the idea to do it? And just like, what were some of the steps that you went through as you thought about doing it? How did you go about actually creating it?
Yeah, it's a good question. So, some folks know the story, but I was sitting downstairs at Packer Place one Wednesday night, and Mike Prager and one of the Bank of America folks were up there, and I think a lady from the city of Charlotte were up there, and they were talking about how to make Charlotte a destination for entrepreneurs. And Mike Prager was up there, and he had the mic, and he said, I just got back from from trying to hire a couple people away from Facebook or Google out in California. I can't remember which company it was. And he's like, I was telling him all about Charlotte and everything else, and what a great entrepreneurial city Charlotte was going to grow into being, and all of this different stuff. And like none of them knew that Charlotte had an entrepreneurial ecosystem. And I'm sitting here listening to him tell that story. I was like, man, they live in California. Of course they don't know, because nobody in Charlotte knows we have an entrepreneurial ecosystem, right?
Well,
And that,
I'll just real quickly, I'd like to share. We tried to bring in the Level days. We wanted to bring on a resource that one of the banks was our client, and it asked us to bring him on board, and he would relocate from the UK to the United States. And we had offices in San Francisco, New York, Atlanta. We had all over the place, but headquarters was Charlotte. And so we told him, like, look, we'd love to have you come to Charlotte. And he said, no, how about if I go to, I think we had a small office in Phoenix. And Chris and I talked about it. We're like, what the hell? Like, why does this guy want to move to Phoenix? Why won't he move to Charlotte? And our conclusion was, he's from outside of Charlotte. The only thing he knows that he's ever heard about Charlotte in North Carolina is HB2.
yeah.
And at that point we had some riots that had happened because of, there was a mishandled police brutality. And I'm like, unfortunately, that's the only thing people know. They don't know any of the good things about us if they're outside of our own little bubble. Right.
No, you're right. So exactly right. So, I mean, here I am, I'm sitting in the back of the room laughing at the fact that nobody inside of Charlotte, other than the people in the room, know that there's an ecosystem here in Charlotte. And so I go home and I have a hard time sleeping, right? I wake up in the middle of the night a lot of times. And I woke up in the middle of the night that night, 2:30, 3 o'clock, whatever time it was. I'm sitting there, and I mean, you wake up in the middle of the night. What do you think about everything? So I'm thinking about Prager talking about how nobody in Charlotte knows that there's an ecosystem. I was like, how can we change that? And I mean, Juan was doing great things with the Start Charlotte newsletter and some of the things he was doing. And I was like, somebody needs to start a podcast. And there should be a podcast about entrepreneurship in Charlotte or whatever. And so I'm sitting there, and I'm awake for 15 minutes and 20 minutes. And I'm thinking about podcasts and how would it be structured, and
did you listen to a lot of podcasts yourself at the time? Or
I was listening to some podcasts at that point in time.
Okay.
Not many, but I was listening, and you're going to ask me which ones, and I can't remember.
Nah, it's fine.
And so I ended up being awake for a while, and finally I was like, I should start a podcast. So I woke up, or I was already awake. I got out of bed, I went out, and I sent Greg Brown, Charlotte Angel Fund, and Dan Rosella an email and said, hey, look, I've got an idea. Here's the crazy idea. I want to do a podcast. I don't know what I'm doing. And because of that, I'd like to interview the two of you and just see how it goes. Right. We're going to figure this out on the fly.
Those are two great guinea pigs, by the way. I had a very similar reaction. Like, who do I ask first? Somebody who's done podcasts and who doesn't give a shit about if it's terrible. Right?
Yeah.
And both of those guys fit the bill.
Yeah, exactly. So, and they can talk, right? I just needed somebody that could talk, because I didn't know how to ask questions.
Those are two, by the way, those are two of my most popular of all time podcasts for both of those guys. They're both awesome.
And Rob, right? Everybody loves Rob Cummings.
I haven't gotten Rob. I've been meaning to ask Rob, and I haven't. I need to ask Rob. Rob Cummings is one of my favorites, and I just haven't had him on yet.
Yeah, no, Rob's a good one. So, anyways, but so that was it, right? I mean, the whole concept was, built around the fact that not enough people in Charlotte knew about the ecosystem, and so how we go back to the principled heart and the white papers, right? My goal with that was to educate people about the need for advanced planning along the estate, right? Everybody does a trust, and they kind of thought, oh, I've done my trust, that's it. Well, Principled Heart was a component to educate people that put money in a trust wasn't estate planning, that you actually needed to have some system to distribute your knowledge. And so the concept with the podcast was much the same. Educate people about what the ecosystem here is in Charlotte. And so that they know about it, so the entrepreneurs or want to be entrepreneurs know that there's an ecosystem here to support them, and educate all of those folks that are driving uptown to the bank about the fact that there's a budding ecosystem here, because eventually there's going to be a venture capital fund, and there's going to be this, and there's going to be that. And as you know, the first venture capital fund that gets started in Charlotte, and TFX is doing a good job with one, and there'll be others. Oftentimes they end up raising money from high net worth investors, right? Well, high net worth investors that don't know anything about angel investing are just say, nah, I'm gonna go invest in this real estate fund instead. um, and so the concept was, if we could introduce the idea of angel investing enough that people would listen to it and at least begin to understand it. Maybe they don't say yes on the first venture fund opportunity, but maybe they say it on the second. Or maybe they go to a Charlotte Angel Fund meeting, or maybe they talk about it amongst their friends or some. So to advance the conversation to make the ecosystem more well known for investors as well as entrepreneurs. So it was a simple concept. Um, I still don't know anything about audio technicals or any of that stuff. So, I mean, you go back and you listen to my first 30 interviews before I hired Brian Adams to do my podcast editing. Gosh knows, I still have a hard time linking those because they are awful to listen to.
Oh man,
Um,
I did my own audio editing for a while,
yeah,
and I think everybody should, because you
yeah,
start to realize how bad your verbal tics are, and like, why do I laugh when I'm laughing, or why do I do this, why do I do that? I
yeah.
think it actually has for me, it's helped a lot in my conversations with people. Have you what things have you noticed that the podcast has helped you to get better at that maybe surprised you?
You know, I think the thing that the podcast has done for me more than anything else is I say way more than I should, even after doing my own podcast editing, right? It drove me nuts when I was editing, and I used to do the tick marks to try to correct myself as I was doing conversations, and I still say it more than I should, but I say it less than I used to. What it's allowed me to do and be a little bit more comfortable with my clients is ask better questions and then wait that extra second, right? Because sometimes it's that wait where you get the follow on thought that you weren't, you're so ready to jump into the next thing that given that extra pause allows them to finish that thought and move to the next one. And that's when you get a deeper conversation than you would have otherwise. So the line of questioning has really helped me a lot.
That's been a big one for me. I interrupt way too much, but it's down. Like, every time I listen to one and I hear an interruption, it shames me, and I need that shaming to remind me that, hey, let them finish fucking talking. They're way more interesting than you are, anyways, right?
Yeah, exactly. So, and it's funny too. I mean, I get listeners that will from time to time email me about something. It's like, don't laugh or in the middle of their sentence, or Mark Mahoney. He emailed me once, and I forget what his comment was, and I shouldn't, because it was a really good comment. I said, I will never do that again. And I apologize, Mark. I'm probably doing it again just because I've gotten busy and forgotten your great advice. But you do get listeners emailing you say, hey, consider doing this differently. I love your podcast. It'd be better if you did X. So, anyways, you live and learn, right?
Absolutely. So do you appear on a lot of other podcasts now?
I think this is maybe my third or fourth other appearance on a podcast. So, um, it is fun. I mean, um, I don't know. I'd much rather be on the other side of the mic, right? I love asking questions. I love learning what makes other people tick. But it's fun to get in a discussion.
It's funny. I'm the opposite. I actually like being asked the questions. I feel like I just get to be myself and I don't have to think about it ahead of time.
Yeah,
I'm just a maniac thinking about it ahead of, like, when I've got a podcast coming, that's all I can think about it. And then
yeah,
I enjoy it when I do it,
yeah,
but it's exhausting to me going into it. But when I go into a podcast where I'm showing up on somebody else's, I don't know. I just get to be myself. I feel like
yeah.
that's easier.
So now, I mean, you're just, I mean, to your point, you're just having a conversation, right? The pressure's off, because it is, right? You feel, it's crazy with the podcast, you feel a responsibility to your listeners. And I was talking with Brian Adams, our editor, about this earlier, and as it grows on you more and more over time. It's not me having a conversation with John anymore. It's me getting the most out of John. So the people that are dialing into my pod, not dialing in, what is this, AOL? The people that are, listening to the podcast are getting something out of it. And that burden grows over time.
Absolutely. So what is your biggest advice to anybody thinking about starting a podcast?
It's horrible advice. Just do it. Right. This was one of my dad passed away a couple of years ago, and he used to always tell me, just do it. Right. Just go do it. And everything else will happen. Right. You'll either do it well or you won't do it well, and you'll figure out how to do it better. So, it's probably horrible advice. It's
No,
definitely from a,
I think it's amazing. I've recently put out a solo episode. I like to interview people more, but I did a solo episode where I said
did you?
get in the game, and I just said get in the game. Just don't perfect it. And I talked
Yeah.
about my experience with the podcast. I didn't talk about a podcast for years and then hope
Yeah.
that I would do it. I did it, and it sucked, and it
Yeah.
got better each time. And eventually, I think I got a good enough at it. But
Yeah.
like you just do it. And we were the same thing with Level. If Chris and I hadn't just gotten in the game and done it, we would have never been at the game. So you just do it. Same thing with Portus Wealth Advisors and
Yeah.
you could have talked forever about going out on your own,
Yeah.
but instead you did it, and then the opportunities create themselves because you're there, right?
Yeah. No, you're right. So, anyways, financial planner tells you it's a horrible idea. Entrepreneur tells you just doing it is the great idea, right?
Yeah, absolutely. Well, look, William, this has been great. Thank you so much for joining. Next time we'll do it in the studio.
Oh, yes.
We ended up doing Zoom, which is great, and it turned out well because both of our internet connections worked out. But at some point, I would love to do it again in person with you.
I owe you a drink since I didn't get to have this drink with you. So, we'll at least leave it at that. That it's for the audience to know William Bissett owes John a drink.
Now it's official. Now nobody can take that away. We'll issue a non-fungible token for that, by the way.
I love it. We're in on. I'll sell it.
All right. Well, thanks so much, William. I
well,
really appreciate it, and looking forward to
thanks,
connecting
Sean.
in person eventually. Yep.
Yeah, no, agree 100%.
All right. Cheers.